Good morning, traders. This is Michael coming to you from GammaEdge on Wednesday, April 16th with our pre-market morning strategy and briefing session. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. We're currently looking at our market trend model. We saw a two-day improvement in the overall market trend model. Our market trend model is based on the tick index. You can research your favorite investing website for a definition of that. But in simplicity it's just the buying versus selling pressure transactions within the overall market, and we put a time series on it to get an overall trend of what is occurring in buyers versus sellers. So our bolded CT here that we always reference, this is our cumulative tick. That's aggregated of buying versus selling. Obviously, if there's more buying, you would anticipate this to be back to the upside. And if there's more selling, obviously that would be to the downside. We did see it recover a few days ago, and it was staying above our shorter term moving averages. That's just give us a trend reference, but we saw it come up to the color, close to the colored ribbon, as we've discussed multiple times. This is an area historically that we see some sort of consolidation, or we can see a failure if we've been in a long-term downtrend. How do we know if we're in a long-term downtrend? This colored ribbon right here is our long-term reference. If the red is expanding below the cyan or in a negative slope, that is indicating that for a multiple period look back time that sellers have been in control. We saw the failure intraday yesterday, kind of into the afternoon, as the bolded CT started crossing below those momentum short-term moving averages, and then we'll continue to watch this today to see if the CT emerges below the moving averages, and then sellers continue to take back control of the overall market. As of now, as we've talked about within our members and within the Discord, the bulls are guilty until they're proven innocent. This overall has been a major selling period within the market with a two-day short recovery. You see that we did not have a significant what we call linear up. That would be like a 45-degree angle of buying, showing that buyers have some sort of urgency. It's just been very lazy to the upside. As you see, the slope basically is flat to positive, but no urgency from buyers, even with the price appreciation in the overall market. This is the SPX price action here, and you can see it just went sideways. With the tick not really rising, indicating buyers were not really coming in hot and heavy. And then we saw the failure here. We'll reference up here. This is our breadth indicator, new highs versus new lows. Again, just flat, not indicating that new highs were outpacing new lows, and then more stocks were not being bought versus being sold. Our filtered cumulative tick, which is our plus 1,000, minus 1,000, there's a large institutional block orders or market participants with block orders, was basically flat to down yesterday. So indicating again that major players were not in the market and were not really doing any buying or selling yesterday. So it was just a sideways type action with a drift, as well as our overall cumulative tick. Really no volume to speak of yesterday, or no large orders, or buyers really not transacting a significant amount. So we'll move on. SPX-A. This is our cruise ship. This is obviously our monthly expiries, longer dated options contracts, exposure to the overall market. Usually these are institutions or larger market participants. We'll draw your attention to these red and yellow boxes here. We are still put dominated above spot price, indicating that in the money puts are controlled above spot price. As you see, the bolded yellow line was our close yesterday. So again, as we discuss every day, if we're in the money put dominated above, price appreciation is going to be difficult and most likely not occurring. Obviously 5,400, we've outlined that for multiple days. That's a key fulcrum or a transition point within the overall structure, as well as outlined by our blue or our white transition box here, indicating that below that we are more negative gamma put dominated, and above that we're transitioning in to a little bit more positive gamma call dominated environment. But as of now, we're going to open significantly below transition and in a little bit more put dominated environment with overhead. We do slightly have favored calls below us. This has changed a little bit day over day. Again, it takes a significant amount of time to turn the sentiment and structure within the overall options lens. So we're continuing to watch this to see if this continues to improve, or does this degrade, indicating that we have out of the money speculators coming into the downside, which would be changing these green negative or green positive deltas to more negative, indicating more puts are overriding the net OI of calls. So that would be more speculation to the downside and possible price depreciation. Moving on to the SPXP. All expiries turned on as noted over here. Again, these are contracts that turn over a little bit quicker. These are dailies to weeklies. Again, noting that we are put dominated above spot price here. We are put dominated on the gamma condition. In the money puts are still controlling the overall complex above spot price. We did try to move a little bit higher yesterday, but failed and rejected very quickly into this put dominated structure overhead. We've denoted the DEX and GEX transition here. DEX is with our blue box, and GEX transition is our white box. You see this major confluence really around this 5,400. We've discussed that, so it's a key fulcrum transition level that we'll continue to watch day over day. If we do get above that, we would get a little bit more edge to the bulls. If we stay below that 5,400 and below the transition where our implied open is, this would give a little bit more favor to the bears. We see this double strike down here at 5,310, 5,300, and then obviously above at 5,425. So that would be our expansive range for today. That would be looking at to the downside. The first test area would be 5,300. If we do get below 5,300, we'd anticipate possible more weakness, but we do have some in the money calls below us that can be supportive. Again, unless we see a significant erosion of this sentiment and structure, and then out of money put speculation comes in and overrides all of this positive net delta that we have below us, turning this a negative net delta, which would be easier for price to depreciate below 5,300. You'll notice that we're call dominated here in the net OI. And you'll be asking, obviously, why we're negative net delta. This just means that the delta of the options contracts, the put contracts, are larger than the call contracts. So again, that's why we are put dominated above. But we do have call dominated here in the net OI, but the delta is just not significantly more than what the put delta is. So obviously the edge is to the bears to the upside via the put dominated structure there. Moving on to the SPX P0 DTE. This is for reference compared to the previous slide. Just wanted to show you what a put dominated structure looks like, and then we'll move on and show you actually what a call dominated structure looks like. Again, this is out of a previous expiry and example, so you can flip back and forth and understand that this is completely what a call dominated structure, bullish structure looks like. You are call dominated above and below spot price with positive green positive deltas via calls, and then the net OI is again positive here. So this would lead toward price appreciation. So again, reference of what a previous put dominated structure looks like, and then a call dominated structure for your viewing there. Moving on to the SPX P0 DTE. As denoted here, we are call dominated, so understanding that the calls below us are larger than the puts above us at the moment, but indicating that 5,400, that transition level, is that key fulcrum. And now with this implied open below those levels, we'll be opening below transition and into this call dominated structure. Again, these nodes that we've outlined here, these are negative net OI. These are large put areas where put speculators could be sitting at 5,300 and then down towards here at 5,280. So these could be areas of first support or first price reaction. So we'll watch those key levels as we open if we do transverse down towards that 5,300 level. Again, these are in the money calls below us. Unless we see some sort of major change in sentiment and structure, these can be supportive with the positive deltas and positive flows below us. So we'll intently watch those. Price appreciation to the upside, as we discussed, will be difficult because of the in the money puts above us and the transition here. Again, if we're above 5,400, we'd anticipate a 5,425 test. We'd give the edge to the bulls. If we stay below the transition, we'd look for some sort of price movement up here and then possible rejection. That'd be an area that we might be able to short for a move back down towards this 5,350. Again, depending on what our vol-m command, which is what market participants are doing on the large volume contracts or large volume of opening and closing of puts and calls. That's our intraday tool that we like to follow, giving us an idea of what the trend is via market participants. Are they are the put speculators winning the battle, or are the call speculators winning the battle? Moving on to our delta balance history. Again, this is just indicating what is occurring above and below spot price with call speculation versus put speculation. Basically a stalemate yesterday with price. We are seeing some sort of projected on out in time delta balance improvement, which indicates that the delta balance blue line going above zero, indicating that call speculators may be trying to speculate to the upside. But again, with the gap down today, we'll continue to watch this. And then after next week, we do see that projected delta balance continue to drop again back below zero. So indicating that that short-term call speculation is really not on out in time and staying call speculated to the upside. So this may just be a short-term burst that we saw yesterday to the upside, and then we see some call monetization, and then call speculators not really maintaining that delta to the upside. So again, we'll continue to watch this day over day for what is occurring above and below spot price via call speculation versus put speculation. Moving on to our net stat command, this is basically just indicating the highest sensitivity levels heading into the open today. We forced the spot price at 53.43. That was close to the projected open, so indicating that, as we've already discussed, 5,300 to the downside, 53.20 will be key areas if we traverse down towards there, as we have in-the-money calls below us. These can be supportive on our first test, move down towards those in-the-money calls, again, unless we see a significant amount of out-of-the-money put speculation via our vol-m command, which is our intraday tool monitoring the options volume to the upside. Obviously, we note that 5,400 again is that key level of transition or key fulcrum level to the upside. We have significant amount of in-the-money puts sitting at that level. So again, this will be a difficult area to traverse to the upside, again, unless we see a significant amount of out-of-the-money call speculation via our vol-m command. So let's head into today, kind of what our thesis is and what we're thinking. The projected open, obviously now we're 54 or 53.35. So again, 53.20 to the downside would be that first area that we'd be looking for a test. And then below 53.20, 5300, again, that matches the option structure and sentiment as well as previous price area. So we'd watch that for our first test. To the upside, the 53.50 would be the first area that we would need to get over and look for a move up towards the 53.70 level. And then obviously 5400, we see that major confluence and fulcrum of N-trans, P-trans, and negative GEX. So again, difficult area, most likely to traverse via the option structure as well as price appreciation. So again, within the overall drunken sailor range, higher volatility. Our expected move actually has increased slightly for today. So we're anticipating a little bit more volatility again to the upside, 53.70, the downside 53.20, and then 5300. If we get above 53.70, we would be watching 5400. So hopefully that helps. Hope everybody has a great day. Make sure you're reviewing all of our previous videos and our educational content that we've been putting out. We encourage you to share this content, sign up for our newsletter as we produce those every weekend, going over our key components here at GammaEdge, and what we like to look for to set up our trading plan and our trading day. Thanks, everybody. Have a great day. We'll see you later.